Hi guys, and welcome to a brand new episode. My name is Marcus and I'll be your host. In today's episode we're going to take a look at Facebook. If you're new to this channel, what we do here is that we study and analyze stocks. We go through the fundamentals and the technical analysis of the stock, but we also talk about finance and investing. If you've been here before, thank you so much for coming back. I truly hope you guys will enjoy this episode. But before we go ahead, please pause the video and read the disclaimer. Thank you so much. Now let's move on. As I mentioned, we're going to take a look at Facebook. And as many of you guys know, Facebook is a technology company with more than 2 billion active users on their platform, and they are traded on the NASDAQ. So if we move down to the screen and let's take a look at the company. So their market capitalization is $1 trillion. And their revenue is $104.8 billion. The PE ratio is 26.9. Now, normally I like to look at companies with a PE ratio of 20 or below. So 26.9 is not far-fetched from the threshold, but still above 20. So that is a no for me. Their profit ratio is 37%, which is great. I'll look at companies of profit margin between 15% or higher. So having 37% profit margin, that is just beautiful. So that is a go for me. Their price to sales ratio is 9.9. I like to take a look at companies with a maximum price to sales ratio of 2. So having 9.9 is way too overvalued. So that is a note for me. And the price to book value is 7.3. I like companies with a maximum price to book value of 3. So having 7, that is too overvalued. So looking at the price to earnings ratio, price to sales ratio, and price to book value, it tells me that the company is too overvalued. Now, they don't pay any dividends, so that is a bummer. I like the dividends, I like the income. But their return on equity is 31%, which is just amazing. Return on equity basically tells us about the company's ability to create return on the invested equity. And as for an investor, that is very important. And having a return of 31% is just great. So that is a go for me. And their return on assets is 17.9%, and that is just beautiful. So that is a go for me. So the stock is currently traded at around $363 per share, and by the look of it, if we look at the 50-day moving average, we are trading above it and also above the 200-day moving average, telling us that the price may continue to move even higher. If we take a quick glance at the chart, we can tell that it is actually moving in a positive trend channel. And with the 50-day and moving average trading below, signals that we might see it push towards the resistance level. Next thing we're going to take a look at is the income statement, and what we can tell by the look of it is that the total revenue has been growing from $27.6 billion in 2016 up to $85.8 billion in 2020, and it has steadily growing ever since. So that is positive. Gross profit went from $23.8 billion up to $69.1 billion, and also been steadily growing. So that is a major plus. And their net income went from $10.2 billion up to $29.1 billion, and also has been growing steadily. So that is a positive thing. That's a major goal for me. Next thing we're going to take a look at is the balance sheet, and what we are interested in is the current assets versus the current liabilities. And basically it tells us that the company has enough current assets to pay off their current liabilities, but in this case they are even able to pay off their long-term liabilities and still have a lot of current assets on hand. So that is a major plus. Great work by the team. I love that. Next thing we're going to take a look at is the cash flow, and we can tell by the operating cash flow that it has been growing from $16.9 billion to $38.7 billion, so that is a plus. and there's a lot of leg room between the capex investment and their operating cash flow. So that is a positive thing, beautiful to see. Move on, we're going to take a look at the key figures, and first thing we have is the earning per share, and we moved from $3.5 per share up to $20.2 per share, and has been growing. One year we fell off, but overall positive trend. Revenue per share went from $9.5 per share up to $30 per share, and has been steadily growing ever since, so that's positive. Equity per share went from $20.5 per share up to $44.9 per share, and also growing steadily ever since, so that is positive. No dividends, that's a bummer. I love that dividend income, but that's too bad. Gross margin went from 86% down to 80.5%, and has been moving lower ever since, so that's a minus. Facebook need to take a look at it. Still high numbers, 80.5% is a high number, but overall trend is negative, so Facebook need to take a look at it. Their operating margin went from 45% down to 38.6%, and went up a couple of years and then fell off. So overall, still high numbers, but I would like to see continuous growth, continuous development. So that is a minus here, not a plus, a minus. Profit margin went from 36.9% down to 33.9%, and went up a couple of years, then started to fall off. So that is a minus for me. So to summarize, the margins needs to be improved. Still overall very high numbers, but the trend tells us that they are moving in the wrong direction margin wise. Return on equity, as I mentioned before, it tells us about the company's ability to create return on the invested equity, and for investors that is truly important, and it went from 17.2% up to 22.7%, and has been growing. Fell off one year, but overall that is positive. The return on assets went from 15.7% up to 18.2%, and has been growing. One year we fell off, but overall moving in the right direction. Equity to asset ratio, also called solidity, basically looks at how much of the assets are financed by the equity, and it went from 91% down to 80.5%. It also tells us about the company's financial strength in the short term, and it has been falling ever since, so that is a minus for me. Still high numbers, but the overall trend is downwards, so that is a minus. Balance sheet liquidity, same thing as solidity, but here it looks at the company's financial strength for the long term, and it went from 6.4 down to 3.5. Went up a couple of years and then fell off, so overall I like to see these numbers improve, so that is a minus for me. Debt ratio went from 0.10 up to 0.24, and has been growing steadily ever since. Small numbers, but overall it's steady. This means that the company has 0.24 times more debt than equity in the company. So not a huge number, but still it is growing, so that is a minus for me. And the company needs to start paying off their debt and improve their margin. And the revenue is growing, that is great. So let's move on. Next thing we're going to look at is the magic of our software. It's called the pillars, and basically what it does is it summarizes everything for you, so you don't have to do what we have done so far, go through the income statement, balance sheet, cash flow, the key metrics. It gives you everything in one slide, in one picture. You get a holistic picture of the company. So for instance, if we summarize everything we have gone through, we can tell that the PE ratio is above 20, so that is a negative. They don't pay out any dividends, so that's a negative thing. But what is great though is that the number of outstanding shares have decreased, which is positive, meaning that for you as an investor, your share of the company grows, as there are fewer and fewer outstanding stocks. Revenue increased over the past 5 years, positive. Profit margin above 15%, positive. profit increased over the past 5 years, positive. Current assets larger than current liability, positive. Solidity decreased over the past 5 years, minus. Balance sheet liquidity decreased over the past 5 years, minus. Debt equity ratio increased over the past 5 years, minus. As you can tell, it gives you a simplified and holistic picture of the company, and it saves you a lot of time. And you can have this software for only $25 per month. You also gain access to analysis where you have more videos and articles that we publish, and you also have access to a forum where you'll be able to chat with me and other members. So for only $25 per month is yours, and we continue to improve the software and provide new features, so that is a great thing. So let's jump over to the technical analysis of the company. So here we have Facebook, and let me see here, so we can clearly see that it's moving in a positive trend. Let me see here, let me just change the color here. Yeah, as you can tell, we are moving in a positive channel, and the price is currently trading above the 50 and 200 moving day average, so basically signaling that we might see higher numbers, that we might see a push up to the resistance level. Perhaps we may see a breakout, but that we have to be cautious, because I like to see that the price goes down and up again, and if it breaks out the heights of the breakout, then it's a signal that we are going to push even higher. But I believe that we will see the price hit the resistance level and start moving downwards towards the support line, and then the buyers will enter and push the price upwards towards the resistance level. And if you trade on these levels, you might see a 20% profit, 20% move. Yeah, so that's a number. That's the way I would trade the stock, or wait for a push upwards and fall back down to the resistance level. That will now act as a support channel, and then push, and if it breaks out, then I would buy here. But otherwise I would wait for it to go down to the support channel and then buy here for a 20% push and exit this stock. For the long term, I wouldn't buy the stock at this level. I would rather wait and see the development, but otherwise I think the company is too overvalued. I would like to see a price of $200. I would certainly buy at that level, but right now I think the price is just too high. So that's it for the Facebook analysis. I truly hope you guys enjoyed this episode. Please give me a thumbs up, comment, subscribe, and get in touch and let me know what you thought and what stocks you want me to analyze. Until next time, take care, and thank you so much for watching. Bye bye.